It may only be short term, but for me as a swing trader, that's an opportunity. But again, what I'm doing here is I'm not like betting the Yeah, so I mean, number one is this is what happens in bear markets. And what I mean by that is that, we saw the Terra Luna situation, we saw the UST collapse, anything that's not made to be on a firm foundation, ultimately in bear markets, it's shown to be faulty, right? So now we're seeing Celsius. I think they're not allowing withdrawals right now, which is sending shockwaves. I mean, that's the equivalent in the crypto space of in the financial system. If a bank said, "Hey, you can't withdraw your money," I mean, that is not a good thing.
Well, here's a bigger one. So the latest shoe to drop is Binance. Binance now has locked up withdrawals and not allowing people to take their Bitcoin off the exchange.
Yeah, the one positive, and again, this could change, but the one positive I heard is that it was just based on some sort of glitch and that within 30 minutes, supposedly it was going to be fixed. If that's the case, that would be a positive. If it's not, then you're seeing Bitcoin going much, much lower. What we're seeing today in the price action is what I would consider blood in the crypto streets, which is just the same as blood in the Wall Street, kind of Wall Street period. This is where I start saying, okay, for a short-term bounce, it is starting to be likely. And again, it's scary, but you have to just kind of keep out the emotion and focus on the charts. And I'll show you here. Let me bring up the charts and take a look. And what you can see here is that there's this little interim support right over here at around 23,000 or so. And that's kind of what we've been dangling right on top of. So that's your short-term support on Bitcoin. I ultimately still am holding strong that I think at the high end of a target, you're talking about this 20,000 marker here. So I still think we're going there. But again, generally, you don't go straight to these levels. It's very rare to see a collapse from where we were, at 32,000 or 31,000 a few days ago or a week ago down to 20,000 that quickly. Usually you get to a level, you bounce a little bit, then you flush again. Ultimately, I still think that we could go as low as 12,000. 12,000 is this pivot going back to 2019. One of the reasons why I think you could go that low, there's actually a few. Number one is it's a measured move. So if you take this distance from this high to this low, which was basically a straight shot down, and then you do a measured move that same distance from here, let me zoom out, from here, it takes you down to 12,000. This would be the same distance repeating, which again, in technical analysis, it's called a measured move. It's some of the symmetry of stocks and charts and crypto. And then the other thing to keep in mind is that 12,000 also is the 80 to 85 correction move, which is a standard kind of Bitcoin crypto winter, right? So again, there's lots of ways here. I'm still a long-term huge bull. This is kind of exactly what I was expecting. It's the .com flush out. You need to see 95% of cryptos honestly go away during this next 1 to 2 year period. It's why I've said so many times when I invest in cryptos, I generally only invest in the top 20 because the top 20 hopefully will still be around to tell the tale, just like Amazon back in the .coms. Obviously that one flourished afterwards, but I mean, it is nuts out there. There's no doubt about it. It is painfully nutty out there, and investors don't use leverage. All right, so here's your Ethereum chart. And again, you can see how it's leading Bitcoin. It's already taken out the 2017 highs right here. I think you have a couple levels coming up. The big one for me is going to be this $800 level right here. That's going to be a very, very big support. So again, basically below 1,000, I really start to think that there's good value here if you can say a cryptocurrency has value. No one thought it would go here. I mean, we were almost at $5,000. So at $1,000, you're basically down 80% on Ethereum, and we're getting awfully close to that, trading at 1225 right now. So yes, it's nasty, but again, if you're someone that has that long-term vision and you're not using leverage and you're trying to build a long-term accumulation portfolio, then you start to nibble. You start to nibble just a little bit, and you kind of say, okay, listen, I understand that these positions could go down 50%. That's just the crypto market, right? Even from here. But if you have that view of long-term, then there's a lot more reward down the line on these good quality names. And I think this goes to the kind of the thesis of like, so I've been nibbling on Bitcoin down here, and I've been nibbling on Ethereum down here as we're getting to these kind of crazy sold short-term levels. Some of the things that I'm intrigued by is you have something called a time count here, which is 2, 4, 6, 7 straight down days in a row. If you look at charts, they tend to bounce after. If you get 7 red candles or 7 green candles in a row, you tend to get a short-term reversal in trend. It may only be short-term, but for me as a swing trader, that's an opportunity. But again, what I'm doing here is I'm not like betting the farm, right? And people are just so insane when they do this, especially in a bear market. When you're going counter trend to the market, you literally dip that toe in the water. So you're talking about, 4%, 2% of my portfolio, what I'm putting at risk initially, and then maybe I'll add another 2 or 4%. But you're not going like 10 times leverage in, praying and hoping that this is the bottom, because that's how you go broke in a bear market. And again, things have changed. Investors have to understand that the days of 2021 are now gone, because the Fed has said, sorry guys, we are not continuing to print money, and the government is in that same position. And that's kind of what I'm thinking too, is I don't think it's as easy. I mean, maybe we flush quickly to 20, but generally bear markets don't end this quickly. So I think it's got to be a little bit more drawn out. I think if you look at past bear markets in general, it's taken about 12 months from the peak on Bitcoin, for instance, to get down to its low before then it goes choppy sideways for about 6 months before it starts to kind of increase. And we're, if we look at November being the high, we're still quite a ways away from November now, when a potential low could be put in. So it'll be interesting to see. And again, the more interesting thing for me is going to be, what does the Fed do when we do enter a recession if inflation is still at 6% or 5%? How do they react when they can't print ad nauseum the amount of money that they were in the past? No, it's amazing. I mean, this is definitely a market that investors need to understand. So many investors came in after kind of the 2020 flush with COVID, and they've never experienced a longer term bear market. And it's kind of a wake up call. I mean, I know you and I have been through many bear markets out there and collapses, but there's a lot of the population that hasn't been. And it's like, it's, welcome to the club, essentially. Unfortunately, it's a club that we don't necessarily want to be in, but it is a club that everyone becomes.